Good afternoon to all of our audience in Europe, and good morning to our audience in the US. Welcome to today's bobsguide webinar, which is titled The Asset Management Landscape Post-MiFID II Implementation. So what happens now? My name is Alex Hammond. I'm the managing editor of bobsguide, and I will be moderating the expert panel we have with us this afternoon as they discuss how the passing of the implementation date of MiFID II has, or perhaps even hasn't, reshaped the asset management industry. It is undisputable that MiFID II dominated the regulatory landscape in asset management for the past 12 months and beyond. And with much of the dialogue focusing on the lack of clarity firms felt that they had received from the regulator on what MiFID II compliance should look like. The cost of compliance and the subsequent role FinTech could play in minimizing those costs while satisfying the objectives of the regulator was another facet of MiFID II that generated a huge amount of attention for firms. So where do we stand now? January 3rd, 2018 has come and gone. Following all the uncertainty, do we now have a clearer picture of what the asset management landscape looks like in practice in a post-MiFID II world? Where should asset management firms now be in relation to MiFID II compliance? How will the regulator deal with firms that were not prepared for MiFID II implementation? And can MiFID II be immediately enforced? Here with me to discuss these topics and more are Eduard Claassen, Project Portfolio Manager at Dutch Pension Administrator and Asset Manager MN, Cosmo Wisniewski, Director of Asset Management Advisory Specialist Citisoft, and Gernot Schmidt, Product Manager Regulation at leading asset management technology solution vendor SimCorp. Before we get started, I'd like to thank each member of the panel for taking time to speak to us all today. I'm very much looking forward to addressing some of the outstanding questions that much of the industry still has with our three panelists from their unique perspectives. And speaking of questions, we will endeavour to have a short Q&A opportunity at the end of the webinar. If you'd like to ask a question to all or any members of the panel, please type it into the chat box on the On24 platform, and hopefully we'll have a chance to get through them, time permitting, at the end of the session. So let's crack on. Eduard, as the asset management representative on the panel, perhaps you could sort of kick off the discussion by just describing the MN road to MiFID II compliance journey from your perspective. Can you sort of talk us through the steps that MN took leading up to implementation, and where you guys find yourselves today, and just sort of maybe comment on how comfortable you felt through the process? Were there any periods where you were sort of concerned about where you guys were going with your compliance?
Well, first of all, thank you, Alex, for questioning. It's been quite a lengthy journey, so to speak, given the fact that the initial live date was January 2016, as everybody will remember, meaning that here with MN we kicked it off at summertime 2015. And when suddenly the regulator in early 2016 decided to postpone the MiFID II legislation in this respect, it was quite an unexpected move for us here with MN, how to deal with that, especially given the fact that we're very dependent on our technology suppliers in this case, because this is a very complex world, so we always cooperate with a lot of tech suppliers. That we almost lost about a year on where to move forward. Then in the late 2016, most of the vendors had taken a stand on where to move towards with their solutions. But given the fact that we're not the only client for these vendors, meaning that 2017 was a very intense year, not only for us, but us being in close cooperation with the tech suppliers in this case. So that everything got pushed to the back of the year with respect to testing and the actual implementation. Have I been confident? In all fairness, in the summer of 2017, I was having a very, very hard time, so to speak, because we had no actual clue if all solutions that were promised to be out there were actually going to be delivered in time. So the summertime of 2017 hasn't been the best of years, so to speak. But as it stands right now, we do comply with all of the parts of the MiFID II regulation because it's a very complex regulation. It's not only about delivering data towards regulators. It's also about how to deal with your internal policies, etc. So where do we stand? We're compliant, but it's been a very, very tough journey, so to speak.
Fantastic. And Cosmo, is Eduard's description of MN's MiFID journey similar to the conversations that you've been having with your clients for the past 12 months as we approached implementation? Did those conversations evolve throughout that time?
Thanks, Alex. I'll separate my answer in terms of a UK EU client first, and then cover the US clients separately because our experiences in the two areas were quite different. So starting with the UK, most of our engagements have been working with a small to medium-sized asset and wealth managers who were clearly substantially behind where they needed to be, say, 12 months ago. And Eduard already made the comment about the year's delay that we benefited from, I guess. So the projects that we've been working with have had pretty rocky moments along the way. We had great support from the client management teams, and the project all delivered satisfactorily in time for testing and the January changeover. So I guess overall it's been a good experience, albeit, as Edward said, we had some pretty dark moments along the way. But there are still some fairly temporary solutions in place in a number of cases, and there's clearly work to be done to resolve those. A second major stream of work for us has been working with service and software companies. And again, as Edward mentioned, they've had a pretty tough time trying to work out what they want to do and then making sure they can roll it out to their clients. So we found they mostly had spent a lot of time looking at and analysing MiFID II and how it impacted their systems. But they really needed increasing confidence, some more clarification on some of the messier areas and detail, support the changes they were making to their own systems. And then they also wanted help communicating this and encouraging their own clients, these end clients, like Eduard, to get their ships ready for sailing these rough seas. So we were able to also, I hope, help and support the schedule that those guys needed to communicate to their clients and encourage acceleration of programs so that people could be ready as early as possible for the testing cycles. But so many people had sort of not really factored in the early parts of 2017. Now, probably from speaking from the Citisoft's point of view in Europe, our exposure to the bigger asset management clients was more tangential and supportive than actually doing major projects, because we'd actually been buried in some major structural change programs a couple of years before, and as a consultancy had been concerned about the lack of clarity and the difficulties being clear about some of the solutions that we needed to recommend to our clients. So we, in fact, took a strategic decision a couple of years back to tread pretty lightly in the MiFID II space as we got closer to the subject and did more research. So this meant that we probably limited our own exposure to MiFID II projects at the bigger asset managers, but actually probably we're sort of pretty happy that we made that decision, and for us and our longer-term client relationships, we think it was probably the right decision. And as 2017 progressed, we kept close to all the seminars, the consultation papers, and the clarifications and changes that were emerging, and shared all of this with the clients to help keep it up to date, sitting on the steering committees to support solutioning and all the other bits related to best execution, investments, research, etc. So the story was, I suppose it was controlled chaos. It was up and down, but we pretty much got there in the end. So I think we're pretty comfortable that most of our UK and European clients are in a pretty good place overall, despite some of their temporary solutions. For our US clients, it was a slightly different story. At the beginning of 2017, the understanding of MiFID II was pretty slight still, and the exposure I had via our US office was that most clients were still at conversation and pre-contract stage. But we got a real rush of interest from actually about August onwards, much too late, of course. And some organisations were so far behind where they needed to be that a lot of work was really talking to them about prioritisation and what they could do in the time to be as compliant as possible, while putting in place remediation exercises that would deliver during the early stages of 2018. So unsurprisingly, we've got some slightly deeper-seated concerns about MiFID II compliance in the US, albeit we don't believe it needs to be overhyped. I mean, the scope is a good deal smaller for US firms in general, of course, and we've found that the US business processes are often fundamentally more compatible with MiFID II anyway, so the changes in place don't need to be quite so draconian. But again, the last quarter of 2017 and even today was and is quite a lot of panic management, quite a lot of stuff going on. Although we're pleased with the progress of most projects, there's quite a lot still to do. We don't think it's necessary to panic about this. We believe it's unlikely that the spotlight will be shone too brightly on the US until a good deal more clarity about UK and EU compliance has been established. But I guess overall, we've got to say it was a good, tough year, and we're pleased where everything is.
Fantastic. And Gernot, I mean, as a solutions vendor, your interactions with the asset management industry comes, from a completely different angle. How have your client conversations around MiFID II developed throughout 2017?
Yeah, thanks, Alex. I think we have definitely seen the majority of discussions in picking up during Q1, Q2 2017, and we did have a fair amount of discussions with large Tier 1 firms back in 2016, but you could definitely tell that the message about MiFID II hasn't yet gotten to everyone at that point in time, and it was only the larger firms who had a significant amount of researchers scheduled to work on MiFID II that could really digest the regulation as it was available back then. So we have seen that in Q1, Q2, we have a lot of clients asking us for guidance, and actually not only using the vendor as a solution provider, but also as a guide, I would call it, through the maze of MiFID II that was at that point in time, and to some extent still is. So I think as a vendor, we stepped up to that, and it was really important that we had really good working relationships already established with all our clients at that point in time that approached us so we could utilize the existing support structures and the consultancy channels that we had in the different units. And that was, I think, key to work with clients like MN and others to support them in their voyage towards MiFID II. I think we have seen some smaller clients coming very late to the party in Q3, Q4 last year in 2017. There was a fair amount of hope, I would call it, especially in the German market, where some firms hoped that the custodian or their let's say their mother company trading desk would be able to do the transaction reporting for them, so kind of an inter-company delegation, and that for some didn't quite turn out as I hoped. So there was a bit of a last-minute scramble in some cases for alternative solutions. So I think it's fair to say that there was a very mixed level of understanding from the technical details and what was really required. And I think also saying a few things about the US and other non-EU firms, I think the non-MiFID firms were really surprised about the indirect requirements coming out of MiFID II. Everyone had assessed, okay, trade transparency reporting, transaction reporting, I don't need to do that if I'm not a MiFID firm. But the fact that if you're trading on an MTF or an OTF, you actually need to provide a lot of the MiFID II details about decision makers and client details. You can't get away with that. So you do have to think about some of the MiFID II details that you thought you can get out of. That was a surprise to many firms. So we did see a lot of discussions with non-MiFID firms in Q3, Q4 last year, when suddenly they got approached by their MTFs and their brokers about how to deal with that they need to provide these details. And I think that was a big difficulty for everyone, not only for us as a solution vendor, but also for our clients, that the guidance from the MTFs was really, really late. It was a big struggle to get technical specifications, to get any guidance on how MiFID II would be implemented, for example, on the fixed protocol side of things. And it was a hard job to get a working solution available to our customers with the very limited information, incomplete information available. So it was, I would say, a scramble on that end. Also for test systems in Q4, and surprisingly even guidance on interpretation of some of the regulation where not only MTS but also the ARMs or the APAs were really hesitant to give any kind of guidance on how to interpret data because they were afraid of providing legal advice.
Mm-hmm. I mean, it sounds like you sort of we're all using phrases that seem to have cropped up pretty consistently throughout the year in terms of things being a maze and there being lack of guidance. Certainly, for the majority of 2017, I think the buy side was particularly vocal about the lack of clarity the regulator provided in terms of MiFID II compliance. Post implementation. Do we think those issues have been ironed out, or is there still a level of confusion about what MiFID II is actually asking firms to do? Perhaps we can start with Cosmo on that one.
Yeah, we saw two distinct sides to 2017. I guess that the first 6 months, as we've alluded to, there was still an awful lot of stuff being sorted out. There's a lot of noise about the lack of clarity. There were a lot of conferences and seminars talking about what was missing. There was a lot of sales effort going on from a lot of companies trying to grab the remaining laggards and sell as much business as possible. And then there was the second 6 months during which there was much more clarity, a softening of some of the interpretations. The FCA got their act together a bit more. ESMA was a bit more of a help. And of course there was more clarity and more experience coming from consulting firms such as ours as well. So I think all those things helped in the second half of the year. And we saw a real acceleration of progress there. I guess something I wanted to point out, we always at Citisoft, we always went right back to the fundamental tenets of what MiFID II was trying to achieve whenever there was doubt and tried to work forward from there. Our conviction had always been that any regulator would deal benignly with apparent non-compliance over the short term if a delivered solution was based on decisions that had been taken where clarity wasn't there, and in order to expedite a timely implementation in order to achieve compliance as much as possible. And so we encourage clients to follow that sort of path and complete a good, strong audit trail to show how all the decisions in key cases were made and support any requirements, definitions or other documents that followed. And that would allow further project reviews and further changes that could be acceptable if minor mistakes had been made. And sort of that's where we find ourselves today in early 2018. Some things we had to make assumptions, so there are still a few small changes taking place. But generally speaking, we believe that the MiFID II is pretty much as clear as you can expect something like that to be, given its breadth, its coverage, and the sheer impossibility of achieving a perfect, properly, fully defined, clear solution. And let's face it, the volume of documentation that we all face through this has been absolutely crazy. I mean, it's depressing going into the website and drawing out all these documents and thinking, got another 200, 300, 400-page document to go through. Huge amounts of work. But now that things are sort of settling down, there's more clarity that's coming from the operational practices and the experience that follows. And we really believe that the end clients, the end investors, are getting the benefits, or are certainly starting to see some of the benefits that the original intentions of MiFID II try to provide. So I think it's a pretty positive story, given where everything was even 6 months ago, but certainly 12 months ago or 18 months ago. I think the industry's done a good job to be where we are today.
And Gernot, what are your thoughts on the lack of clarity?
I think I would echo what Cosmo said about the advising clients to take a documented and approach about assumptions they make. So everyone agreed very early on that this was too big a beast to really get 100% right from the beginning. And I think clients took assumptions and over the year became more and more comfortable with this approach, because there was a bit of radio silence, I would say, in the first half of 2017 about how to deal with these unclarities from the regulator. And then actually in Q4, I really remember that regulators, both in the UK but also in France and in Holland, they were vocally expressing kind of a leniency against non-compliant because of making wrong assumptions. So I think it's really, in the end, everyone got comfortable with the approach of doing what was possible, but not trying to read, and kind of reading the future. So everyone got a robust solution in place, and the clarity, I think, in late 2017 helped with that. there are still outstanding clarification. I think that people are waiting for to make sure they have a future-proof setup, especially once the transparency reporting, once the treatment of systematic internalizer trades. The whole TOTV discussion on the derivatives that hasn't yet finished, and I think we're only now seeing a lot of technical details to come to the surface. If I just take an example out of the last weeks, it's surprising really that we are now 4 weeks into MiFID II transaction reporting, and only now many of the NCAs are connecting to the ARMs, to the approved reporting mechanism. So there is still a lack of integration between those two very important parts of the reporting chain, and this will continue. This will continue all the way through February and March, according to what we have heard from the various arms. And it's software project all over the place, not only at the arms, but also at the NCAs. They do have problems on their end as well, which feed through to the arms, feeds through to the buy side. So I think at the moment we see operational issues that will only be ironed out during the first half of 2017. And I think it was to be expected, but to be honest, I think everyone feared it would be even worse. I've been to conferences in the last days of 2017. Everyone thought, we're not going to see any trading happening. We see breakdown of the whole market, and it didn't get as bad as everyone thought. So I think it is positive in overall.
Mm-hmm. Fantastic. And what about your perspective, Eduard? Are you confident with, you confident you know what the regulator expects from MN?
At this moment in time, I can say yes, but would you have asked me the question about a couple of months ago, I would have been not that certain in terms of an answer. The point is that the regulation was there in the beginning of 2017, except for some of the technical details. And as Cosmo rightfully said, there was already a lot of sales activity going on. So that from one perspective, you get the story, okay, we got your MiFID II solution out there, so apparently everybody knows what to build and what to do. But once you get into the technical details, you find out that there's still some unclarity. So for us, being on the asset management, on the buy side part of the market, we had the idea that, okay, a solution will be out there at some moment in time, but in due course of 2017, we were still struggling to get that solution in place. And as a company, you always are looking for what you might call a one-stop shop. And unfortunately, there wasn't any in the market, so we also had to build some stuff ourselves. And that was quite of a burden. And as already mentioned before, is that the process that you're in and the documentation on your decision making is very key in projects like these. So all along the way, we're confident that we are compliant and that we can face up with the regulator once they show up. And that's another part, because especially from our side, we've been trying to be in contact with the local regulator quite often, and they're pretty understaffed. So meaning that if you have an answer or if you have a question, you're not already get a answer being an answer that you can actually work from on. So yes, as it stands right now, we do know what to deliver, but in due course of 2017, it was a totally different story.
I mean, that's it's certainly very interesting what you say in terms of trying to be in contact with the regulator, and not feeling as though sort of there's an immediate response. Do we feel as though we're in sort of a little bit of a grey area in terms of being past the deadline for MiFID II implementation, but not actually a point where we can see it actionable? I mean, it's sort of, if we're thinking about where we are today, where should firms be right now? I guess is the question, to feel comfortable with their MiFID II compliant efforts. Like, can we expect immediate regulatory crackdown, or as I say, are the regulators swamped and are therefore going to give firms a degree of leeway? Gernot, what are your thoughts on that?
I think generally speaking, clients are comfortable and firms generally are comfortable with the solution they now have that is working. And I think we definitely see our customers now looking into a lot of the details, some trading scenarios, but also some of the maybe more esoteric reporting scenarios like voluntary corporate actions and OTC derivatives and structured products that might have not been received all the attention in the last days of 2017 because of the pressing deadline. So I think there's a lot of fine-tuning going on, but overall people are reporting. They are reporting in high quality, I believe. They are reporting in high volume. I mean, the French regulator has received in the first 5 days, I think, more than 3 million reported records, which is a huge number. So the big NCAs, I think, also are in a shape where they can process most of the data. But there is still a lot to be done, and I don't think it's necessarily on the buy side. I think a lot to be done really on the infrastructure around the arms, around the NCAs, but also around the APAs and the exchange of data from the first database down to the various pieces. That's not consistent yet, and there's a lot of technical aspects that need to be addressed. But generally, I think don't expect regulators to issue fines in the near future this year for wrong reporting because there's too many moving parts that don't fit together yet. There's some leeway that has been expressed also last year from regulators about not pushing too hard on everyone who tries their best. I do think there will be some first cases later this year with regulators fining firms that don't do their best, that can't prove that they have done enough, that are kind of maybe, I would use the word lazy, or try to get away with it. And I think there will be some initial cases to show the willingness of the regulator to prosecute.
Sort of, Eduard, what are your thoughts in terms of, as I say, obviously, MN has made this concerted effort to get to a point where you guys feel very comfortable. Do you sort of feel as though you're at a position now where you're reporting to a sort of regulator that is unable to kind of process those reports, I guess?
Well, that's a bit of a grey area because I don't think that a regulator will formally say we can't process your reports or so. But as Gernot already said, is that as long as in this case as an asset management company, you can prove that you've done your utmost to deliver what's been required on every aspect of the MiFID II legislation, you're in a pretty good shape. But I would be surprised if we have the regulator here on our doorsteps within the next 6 months or so. But this is also, and I guess that everybody can agree on that one, with the implementation of MiFID I, there was about the same. It took about a year before you would even get questions about the reports that you would have delivered towards your regulator. So again, it's a grey area. Yes, we comply. Will the regulator say your report is wrong or is it right? No, that will take some time. So it's a matter of time once you'll be in a dialogue with your regulator with respect to the content that you have been delivering towards them.
Okay, fantastic. And Cosmo, is that would you sort of echo those thoughts as well in terms of the clients that you speak with feeling relatively comfortable about where they are at the moment?
Yeah, I think I've already sort of partly mentioned this before. We sort of generally believe the regulators are going to take some time to catch up. There's an awful lot of data hitting all sorts of different areas, and I think that this whole infrastructure question will take time to bed in and settle down. And the regulators will and always have, in these cases, accepted certain amounts of short-term error, as long as it's made in good faith, as long as it's done with best efforts, and as long as there is a remediation strategy visible and designed and also able to be seen by the regulator to close those gaps as quickly as possible. So, it's not that long ago since we were messing around with good old Solvency II, which was, I suppose, a similar, well, not quite as big, but a large-scale regulatory change. And again, similar areas in terms of delivering data to large infrastructural systems. At least 3 to 6 months we're expected to achieve proper full compliance there. And I think at least the same, again, as the colleagues have said here, the regulator is not really expecting to crack down on people in the short term as far as we're concerned. So that's all true, but as I said, there's so much data hitting the regulators, and of course the world doesn't stop to let them catch up. So there's a lot for them to do. There's a lot of work going on there, and I think it's reasonable that we can feel confident that these positions of do your best and close the gaps is a good and strong position to take and can be supported, and much better than any alternatives that you might consider. Finally, I guess we've all seen pretty hectic market activity over the last few days, and it's interesting that the markets have been able to cope with all of that, given what's been going on. But also, I expect that there'll be a great deal of macro analysis of what's happened. I mean, given the possible impact of passive funds on the cycle of downward spiraling markets, following the sun, causing other markets to open lower, I think there'll probably be a certain amount of analysis at the macro level to try and work out what's going on, which will probably take some heat off individual micro-level analysis of data errors. So I think, again, some of the recent activities are likely to support a longer-term time frame in order for asset managers to get their acts fully together.
Mm-hmm. I mean, I think that certainly puts an additional spin on things. If we could sort of, accept that that there is going to be this bedding in period, and it was something that sort of everybody had anticipated. Are we able to look beyond that sort of initial bedding in period? I mean, Eduard, how do you kind of sort of looking beyond that stage? How do you expect the regulator to enforce MiFID II in general? And is that a question that you guys are constantly thinking about?
Well, if you look at the MiFID II, it's a combination of topics. Yes, of course, you can look towards your reporting, so your transaction reporting that you provide towards your regulator. In all fairness, I don't think that there will be much of a focus on in the first 6 to 12 months almost. Here in the Netherlands, at least, the client cost report that we have to provide towards our clients, I think that will be a topic that will be looked into. Same goes for the research unbundling, because this is typical of a subject which hasn't had that clear specifications for everybody. So from as we see it here with MN, we expect that the regulator will look on your cost reporting, not so much on your transaction reporting, because there's so much happening also from a technical perspective that we don't see much of an enforcement from the AFM, so the local regulator here in the Netherlands on that part. But we do expect to see something with respect to your client cost reports and your transparency reporting.
And Gernot, what are your thoughts in terms of sort of the long-term vision on how the regulator is going to enforce MiFID II?
I think this is actually a really interesting story to watch what happens in the next 12 to 24 months, because from a technology point of view, the regulators are swamped with data. I mean, some estimates say there will be about 1 trillion data records per year to digest for the NCA. So I really hope that they have a really good and sound big data infrastructure in place by now, and I really expect them that they have learned some lessons from EMIR and MiFID I, so at least they know what questions to ask to the data. And I would expect that they will ask these questions very targeted, so not maybe kind of going for many different firms to investigate, but really trying to find some pockets in the data where they can actually identify market abuse, and especially maybe using the times of volatility that we see now. At least I would hope that that's what they built the infrastructure for. But technical issues will need to be ironed out, so I don't see action expected to be in the next 6 months either. So I think this is really exciting to watch from a technology point of view, to see how the different NCAs are going to deal with this situation. So nothing happening in the next 6 to 12, I would say, but then we'll definitely see some interesting cases coming to the news, I would expect.
Fantastic. Cosmo, is that the opinion that you share?
Yeah, generally speaking, I completely agree with the guys, and but I've got some friends. This is a rather parochial FCA type of comment, UK based, but I've got quite a few friends at the regulator, and they seem to be having a hell of a time struggling with budgets, headcount, structural departmental changes, and they've got a lot of internal problems, certainly in the UK. So I think it's going to be a while before they're able to concentrate in any specific way on MiFID II. And at the moment, from what I'm hearing, it's mainly just BAU reviews that they're expecting to cover MiFID II. But they do keep on going about making sure that they can see that the impacts of the fundamentals of the market, fairness and transparency, best execution and better protection, conduct of business, and all the general global principles of good behaviour that MiFID II is supporting, and corporate governance, etc. They want to see those right now, and that's built in straight away into, I think, the reviews they'll be doing. And it'll only be sort of later on that they take such a hard and detailed look at detailed records and reporting. So I think, again, I agree, it'll be some of these macro areas that need to be dealt with first. The micro areas of detailed data will take longer, and it'll be a while before people get punished for that.
And just sort of turning back away from the regulator towards the pain points of firms and compliance. So looking back now, what do we think? And sort of looking to where we are today, what do we think are the biggest issues for the industry in terms of compliance? Is it is it still simply a lack of clarity around what the regulator is demanding? Is it is the cost of compliance a big factor for firms? Is it a lack of quality solutions in the market, or is it something else?
Yeah, it's probably all of those things. Of course, in the sheer scale and scope have been great big challenges, and trying to fit all this in with all the usual business as usual projects, it's been a major issue. Clearly, the whole clarity and lack of understanding was a big issue. The lack of interpretation agreement between the various NCAs, ESMA sitting in the middle, it wasn't always ideal. So the clarification could have been better. The forewarning of complexity has been there, but not really the solutions. And in some cases, we found that it could have been a lot better. We also found and continue to find that the rules around systematic internalization were pretty confusing, and that's still an area where our clients are not quite sure what's going to happen. Deferred implementation dates, some aspects of MiFID II are continuing to provide ongoing questions. But for us, it was our private wealth clients who had the biggest hit. They've had probably the most arduous journey through all of this, and probably the greatest operational and cost impact relative to the size of their business. And they're already reading in GDPR. So regulation is a big burden for the industry. It hasn't gone away. I think we all need to hope for a little bit of, not peace and quiet, but a little bit more room and air in the markets for the next couple of years. But perhaps what we're seeing at the moment shows that that's just not going to be the case.
I mean, what about that same question from MN's perspective, Eduard? Is the cost of compliance the most arduous obstacle to overcome?
Cost is certainly a factor that you have to deal with within a company, because at the end your client has to pay for it, and that's something that we do want to avoid. So cost is definitely one of the topics that you have to be keen on. So the cost of your compliance in this case. But the biggest challenge, for instance, that we have is to keep focus, and the legislation is there for a good reason, making sure that you always have the best deal and do what's in your client's interest. And once you have this implemented, it doesn't mean that it goes away. MiFID II started as of January 3rd, and although the project has been running for 2.5 years, it actually starts this year, meaning that you have to provide towards your clients the best kind of service that you can give them at the best cost that you're able to find in the marketplace. So for us, yes, legislation is there, and yes, these legal projects are can be a burden. But on the other hand, yeah, it's the market that you're in, so you have to comply.
And Gernot, from the solution vendor perspective, where do you see kind of the sort of the future opportunities created by MiFID II? Is it are you looking to fill a space where firms can't continue to comply without consulting with the tech vendors?
I think the whole the collaboration between tech vendors and firms was key to the implementing a successful MiFID II solution with all our clients, and it's going to continue. I think that no one can really solve this on their own. I mean, we do offer clients services to also keep them updated on the changes to MiFID II, on the interpretation as it evolves, and so all of that I think is really important. That you as Eduard said, you can't stop complying now. You need to continue. It's a continuous voyage towards an unknown goal, and that is something that people will do. But I do think there is a change in discussion already happening now, from being compliant to taking this as an opportunity. And I think the opportunity that a lot of firms have taken is actually the move to electronic trading, moving more of the volume of the trade flow to MTFs, to OTFs. I've had discussions before MiFID II go live with some firms saying, well, actually, I'm happy that we have MiFID II, because now we really have a strong business case to my management to actually get 100% electronic trade flow and get rid of all the manual workarounds, all the manual processes, spreadsheets that are used. So MiFID II was an opportunity to get a stricter and clearer process in place. And I think that's good, and that's going to continue. We're going to see more and more understanding of MiFID II, what it means, and we're going to see more and more embracing and harvesting of opportunities here. So I think I'm optimistic about what a software vendor can help can help their clients with, which is about harvesting these opportunities by continuously enhancing solutions to deal with that.
Fantastic. And then just sort of one final question from me. If we were to kind of look even further down the road than perhaps we've done already, how is it possible to project even further than that? Is there any sort of legacy legislation that gives us a clue as to how the landscape is going to change moving forward, and kind of what the key conversations are going to be? Cosmo, do you have any thoughts on that?
Yeah, well, I guess we are going to see how the penalties and all that sort of stuff plays out. As I think we've already mentioned, I don't really see that being a big deal, probably, but we don't know. And clearly there will be some individual firms identified and made an example of. It has to happen. It almost certainly will happen. It's a very, very big market, and I'm not aware of what's happened in all countries of the EU at all. But it's been quite clear that there's been a lot of variety, a lot of variation in what's been going on. So all that sort of stuff will become clearer. But I think there'll be a whole load of other things that become clearer as well. It really, in terms of my interest, I want to see what the impact is to my asset management clients. We're already seeing quite a lot of impact on how systematic internalization works and gets people out of different requirements, the level of trading in dark pools, and whether this undermines any transparencies that the MiFID II is really trying to provide. And of course, the whole arguments that was revolved around research commissions that went backwards and forwards and backwards and forwards. Will that impact the availability of good research? Will it affect different groups? Pension fund trustees, for instance, who I know are a bit worried at the moment about whether they can get information and how they're going to get it and whether they're going to pay for it. So there's going to be quite a lot of stuff that emerges over the next 12 months, and that will continue to lead, along with the mistakes and the clarifications that have not been done in time for implementation. All these things will, I think, lead to a cycle of change over at least the next 18 months to 2 years, where there are going to be significant rethinks and detailed changes. So MiFID II doesn't look like it's going away for a while yet. We think it'll rumble on for quite a long time. And again, a lot of our clients will try to find better ways of doing some of the things they've done, cheaper ways of doing some of the things they've done, and the service provision will become clearer, and better services will win out against less efficient services. So it's going to be a fun road ahead, as I think we all know. It certainly isn't going to stop, and it's not quite time to take a long holiday yet. And I'm already sort of feeling that MiFID III has a sort of inevitability about it. I just hope it's not going to be for a good few years yet.
No, I would certainly echo that. Gernot, what is SimCorp's thoughts on the next sort of few years in terms of how you're gonna shape your products around MiFID?
I'm really excited to watch what happens in the FinTech space with MiFID II. I think we already have seen on the research side new platforms emerge in the last 2 years, and I think adoption of the whole research portals and research providers, independent research providers, that's exciting to see, and how our customers adopt these new services and how they want these to be integrated into their investment decision process. I think there is a lot of things to consider for a solution vendor, how to integrate these new platforms, these new services. There's also, I think, a lot of potential for fintech firms to harvest the massive amount of data coming out of MiFID II. Just if you think about the best execution data for coming out of SIs and MTFs, OTFs, the APA published data, all the other information that is suddenly public knowledge. And I think if someone clever will come along, I really believe that someone clever will come along and make sense of this data, will offer that to firms as a service that they can use. And again, it will need to be seen how the expectations develop for integrating that into an investments process. Thirdly, I'm actually going to make a bet that in 2018 we will see the first non-EU regulator, maybe in Far East like Hong Kong or Australia, announce some MiFID II-like regulation in their own regulatory space. So I wouldn't be surprised if we see MiFID II in Australia or Hong Kong in 2020.
That's great, and perhaps you can wrap us up, Eduard, in terms of how far down the road have you guys projected? How far ahead has MN planned, and kind of what do how do you see that journey going forward?
Well, in line with the MiFID II implementation that we've now completed. The main objective for us in the upcoming year, so to speak, is to streamline and to see where we can cut costs with respect to the solutions that we've implemented in there. So with the technology partners that we're working with, we want to stabilize and make it leaner, so to speak. With respect to legislation that's coming our way, given the size of the company, for instance, a project like the GDPR implementation in May this year is significant for us. So we don't have the means, so to speak, to run multiple legal projects in parallel. That's too much of a burden for a company like ours. So we have to be clever with respect to what legislation is coming towards us and where do we actually invest in. So coming back for us, it's streamlining the MiFID II implementation and then jumping on the next bandwagon of legal projects that we're into, and meaning the GDPR one.
Fantastic. We are running sort of slightly behind on time, but I am going to sort of try and squeeze in a couple of questions from the audience. The first one comes from Gaurav Chandra, and I think his question is for everyone on the panel. What are your thoughts on the strategic versus tactical decision-making for implementing MiFID II thus far? Do you think the vast majority of buy-side firms especially have taken the tactical approach to being compliant?
Shall I answer that one?
Yeah.
Well, in this case, No, it's not so much that we've chosen a technical solution. We built the solution up on our, let's call it our future architecture. So we didn't choose that many technical solution. We built it upon our designed architecture, so to speak. So that's why I can say that we're confident that we can streamline in the upcoming months. If it would have been a technical solution, I would have had a next step project running right now, which is not the case.
I think
it's probably, it depends how you interpret that strategic versus tactical question, because I think in terms of being forced to employ imperfect short-term solutions, of course firms have been forced down that route in many cases. But I think it's a different way of looking at it. It's been pragmatism that's ruled the day over the last 6 months. So I think as we've already discussed, I think most firms have got plans in place to streamline what they've done, to try and reduce costs, to try and rationalise vendors, to try and look for improved service provision where it exists, and to chase the optimum cost benefit model for their MiFID II compliance as it develops. But I don't think it's quite as bad as strategic versus tactical, which is a subject very close to my heart after many years of delivering projects to clients. So I think not quite as bad as the question suggests.
Yeah, maybe also from me, I think I've definitely seen some clients taking a lot of pragmatic approaches, which I think is a better word than tactical. So it's being pragmatic about what you can achieve in the short time you had at hand. But everyone I spoke with really has is going to use MiFID II in the infrastructure, in the strategic platform setup that they already have. Sometimes there was definitely need from some firms to be very pragmatic because they realized some need very late in the year. But still, I think most clients definitely have a very strategic approach to MiFID II.
Fantastic. And just one final question for Eduard, which comes from Rashid Kui. What were the main challenges that you saw sort of leading up to the deadline in terms of partnering with FinTech vendors? Was it on the technical side? And sort of how many vendors did you include in your MiFID II compliance solution?
In the end, we implemented 3 vendors where we initially had 2 in place, but we had to replace for one of the functionalities one of the vendors in that space. And the biggest challenge there was let's call it the resource availability, making sure that your vendors have enough staff to assist you with the appropriate knowledge, and given the fact that you're dealing with vendors who have a time zone to cover, so for instance also from a US perspective, meaning that you have to be patient once in a while to get the right person on the phone to actually give you the answer that you're looking for. The biggest challenge for us was to have it all aligned, the 3 parties and our internal organization for the actual go live. And we were pretty early in the game. We went live technically late November because I wanted to have as much time possible to make sure that we have the last details ironed out prior to Jan 3rd. So we were pretty pushy towards our suppliers.
Fantastic. That's some more great insight. We have run out of time, unfortunately. So thank you for everyone else who did submit questions. If you check on Bob's Guide, I will try and get as many of those questions answered in written form and present something on the site as soon as we can. It just leaves me then to say thank you again to Eduard and Cosmo and Gernot for some fascinating insight. And to remind you that the recording of the session will be available on Bob's Guide soon. Thank you again for attending today, and we look forward to welcoming you to another bobsguide webinar in the near future. Goodbye.